Everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 26th of June, 2020, and we lost a little bit of ground this week. Last week, the theme coming into this Monday was one of uncertainty, and it has resolved to the downside. So let's take a look at the charts and see what kind of damage has been done. We did close below the 200-day moving average, but it's still rising slightly, and we have a rising 50-day moving average, so I don't think it's the beginning of a major end. However, that doesn't mean I'm not cautious. As we know, when the market is below a declining 5-day moving average, I consider it guilty till proven innocent. We have, for the last 3 days, made a pattern of lower highs and lower lows below a declining 5-day moving average, which tells me that in the intermediate term, the sellers are in control, whereas on the bigger picture, we have a little bit of indecision still. I think that what's likely is we undercut this prior low and maybe undercut it slightly or a little, have a little bit of a washout below that level, then come back up. And if it fails to hold above the 200-day moving average, then we start to head lower. So it's certainly at a critical level. Let's take a look at that 15-minute. Actually, let's go over to a 65-minute time frame. The volume-weighted average price that we've had our eye on from the May 1st gap lower was tested mid-month, and then again this past week on Wednesday, and again today. We closed right below it, right at the 200-day moving average pretty much, and right at the round number of 300. It seems like to me, again, that some further selling is likely. Maybe we get some bad COVID headlines. Whatever the reason might be, I don't want to speculate on it. This is all about interpreting price action. I can let other people make guesses about what the reasons are. But what we have here could be also a measured move. So if we take the height of this A to B, and then we call this C to D, what that would give us is a price objective, perhaps down towards the 290-ish level, 289 and a half to 290. So be aware of that is where we might end up coming down before we get a bounce. The risks, in other words, are higher for the long side in the intermediate term in terms of the S&P 500. For the Nasdaq, this is the first close we've had below the advancing 20-day moving average since this gap here in April. So if we take a look at that as a significant event, we can put a volume-weighted average price on that. That measures down to 225, which is certainly much too low to consider as a potential reasonable expectation for a downside target on this leg lower. Let's instead look at the 30-minute time frame. Here again, let me just clear that out, and let's go back to the daily time frame, because what we've been talking about, the pattern of higher highs and higher lows, it's still in existence here. We would really, to break the definition of an uptrend, we'd have to get below this level. Now, what you would have happen if that were to occur would be maybe something like this, test the 50-day moving average, and I think you're much more likely to get a bounce than this being an event that you should sell short. And if you're currently using this as a place for a stop, I think it's a terrible place for a stop, because you tend to have a shakeout just below that before the next leg higher, and then we see if it rolls back over. Let's go back to the 30-minute time frame and just kind of clean that up in here. And what we'll do is together put some important volume-weighted average price levels on. Now, this is the week-to-date volume-weighted average price, and you can see that that's where we had found resistance along with the 5-day moving average midweek. So now we look at this area that was a prior band of support, and we look at next week as 242.5 to 243 as the potential level of near-term resistance. So again, on an intermediate term basis, the sellers are in control. Bigger picture, the buyers are in control. So we have mixed messages, and that tells us if you're going to take trades to the long side or the short side, you ought to be doing so with smaller than normal share size, because it can go, we can see some chopping around. It doesn't mean that this market has to reverse. It means that we can look at it and expect at least some price consolidation through time. The Russell 2000 has been the weaker group. It continues to be weak. It's hanging right above that rising 50-day moving average. Again, a likely scenario, I think, would be it breaks below this low, rallies back up, and then maybe we start to pull back down. Don't wait for down here before you decide to sell or sell short. The 30-minute time frame, we broke support here midweek. That was tested and it held as resistance Thursday at the close. That was also below the declining 5-day moving average. So again, the direction of the 5-day moving average, in my opinion, is the best intermediate term trend indicator you can find. I've been saying that for 15 years now. I haven't seen a reason to change my opinion of the value of that 5-day moving average. The semiconductors are, also closing below the 20-day moving average. Now, we had that happen over here in May as well, but perhaps now we drop down even to the 50-day moving average here. What's most important to recognize, I think, is that we're below a declining 5-day moving average. This prior band of support in here acted as resistance here on Thursday. That's also the week-to-date volume-weighted average price, and we're below the volume-weighted average price from the prior higher low, and that tells us, we were unable to get through the resistance. Instead, we broke down, failed at this short-term level of support. That short-term support became resistance. The sellers are in control, so there's no reason to be looking for a purchase until we have more clarity on the shorter-term time frame. Biotechs have been saying, the last week and a half is that they've been extended. They got a little bit extended with that breakout. You certainly don't want to chase a move like this, just as you don't want to sell short, after a big decline. You want to let it pull back, settle in, and then see if it can rebuild energy. There's no reason to play guessing games and try to buy the bottom of a move. But right now, we're below a 5-day moving average here as well. So I look at this market is more neutral than anything. This prior band of resistance is so far holding as support. It doesn't mean I would want to be a buyer because the intermediate term trend momentum is lower. So to me, it's more of an avoid. If you follow me on Twitter, you're going to see that I put a lot of actionable ideas on Twitter. And I won't go through all of them. Yesterday, I put BNTX on at 54.5. And that one, you can see has performed just beautifully in here. There are a lot of great individual stocks. If you don't want to subscribe to Alpha Trends and get the ideas, go ahead and take a look at Alpha Trends on Twitter, because that's where you'll see a lot of my information. Anyways, back to the broader market for a moment. We'll take a quick look at these financials and wrap it up here. The financials continue to be the weakest group. We were hoping that the bullish case would be it could hold in this area. So far, we're breaking down. Let's see on Monday if this is just a shakeout. My feeling is it's probably not. So we had, from failed moves lower, came this fast move higher, right up to the 200-day moving average. It came down to this prior band of resistance, bounced once. Now it's failing to bounce, and we could do the same thing and take a look at the measured move on this market and say the height of A to B, we subtract, this is B to C, and then we would say, what would that give us if this is point C? Where would point D end up? Well, here's the easiest way to do it. Let's just grab this line, put it there, and that would give us a downward objective down towards 2150, which certainly looks reasonable from here. The bigger concern, I think, for this market is that if you look at the volume weighted average price from the March low, we're right on that currently. So maybe we get a little bit of a bounce first and then break it, but it's certainly looking much weaker for the financials. The financials are an important group to the S&P 500. So if they really fail hard, the S&P 500 is going to take notice and probably sell off deeper. That'll do it for me. Have a good weekend.